Hey, my name is James Nicholson and welcome to my channel. In this video, let's talk about interest rates. The Bank of England are going to be meeting this week. What are they expected to do? It might surprise you because there's a few differences of opinion this time round. So what are they expected to do? What does that mean for us as homeowners, as landlords, as investors? Because interest rates are a big issue in our business for sure. So before we jump into that, as always, if you haven't done already, make sure you smash that subscribe button, hit the bell notification. We're going to hit 11,000 subscribers. Actually, probably by the time you see this, we're at 11,000. Let's get it to 12,000 subscribers now. And you guys know what to do. Smash the like button, hit the like button, tickle the like button, do something to that like button over there. That really helps us with the YouTube algorithm. I've given you guys some updates on progress so far this month. When the month started, we wanted to hit 100,000 views. Then we got to 200,000 views quite quickly. And we've now hit 400,000 views in October, which is absolutely insane. The channel is absolutely blowing up at the moment. So thank you to everyone that watches. So what's going on? Well, the Bank of England are meeting again on November the 2nd, which is this coming Thursday. And this time, it's a little bit more unsure what could happen. Now, when we've been going into these meetings, it's been a case previously of, are they going to go up or not? This is the first time, if you look and do your research and look at all the analysts that are talking out there, most people feel that the Bank of England is going to hold, but there are now pockets opening up where people think interest rates could rise, and there are other pockets opening up where people think interest rates could also drop. So I want to talk about why that is and what that means for us as investors. So the interest rates have been going up because of inflation, and inflation in the UK is really sticky. It's been really not being dealt with particularly well, in my opinion, by the UK government. Other countries have got their inflation much lower than we have. America's in the 3%, lots of Europe's in 5%, and Spain is in 2%. And so we sit as a UK, our inflation was expected to drop, but it's still right up there at 6.7% this month. Now, we were expecting November to have a big drop, but that outlook has just been tweaked. And so what we were expecting was, because gas was cheaper for a while, that the energy costs would drop significantly and the price cap would drop in November. That's not looking good now. And so gas prices, you hear oil prices going up all the time, but gas prices have actually gone up 70% again, which is not great news for any of us. And so what that means is that energy costs will come down, but not by as much as we were hoping on. And that was the bigger driver to get that inflation down to 5%. So I'm not an economist. I don't know what's going to happen, but wars happening in the world obviously impact this kind of stuff. And Saudi Arabia and Russia, they're not really our best friends at the moment. And so if they can charge us more for these products, then of course they will. And so that's a problem that we have at the moment. So inflation, who knows where that's going to get to? Let me know where you think it's going to go in the November figure. We're at 6.7. What do you think it's going to hit in November? So it's not expected to go down as much as it was. That's not good. Now, so that means that potentially inflation is going to stick around in the UK that little bit longer. And that is where the arguments for increasing the rates are coming from. So you've got wages that have been going up. You've got energy costs that are going up again. And that could lead to driving inflation even further. So that's on the side of pushing the interest rates up. So what about the people in the middle? Well, that's the majority. The expectation is that the Federal Reserve, so the Americans, will likely leave interest rates unchanged tomorrow, Wednesday. That's likely to happen. And the UK often does what we call follow the Fed. That's the phrase. So we have to keep our interest rates close to Americans, because if we don't, the pound will crash. That will drive up inflation even more because it'll be more expensive for us to buy stuff. is a real delicate situation. So it's expected Fed will pause tomorrow, and most people feel that we will, in fact, pause as well. Now, there's a pocket that are arguing that we should cut rates now as well, and that's getting a little bit more vocal. So what are they talking about? Well, they're talking about employment is dropping, and so there are more vacancies now. That's an indicator that the economy is starting to not do so well. Consumer confidence is down. A lot of us feel that it's going to be a tough 2024. We feel potentially we're going to be into a recession. So if we're talking our way into a recession, it's way more likely to happen. We're seeing data that house prices are dropping, and a lot of big companies are overstocked on products at the moment. So I saw a really good video about Nike, depending where you're from, is massively overstocked at the moment. And so they have produced huge volumes of trainers and clothing. And what it's looking like they might do is do some discount sales to get rid of that stuff. So that's potentially going to drive down inflation. That's just obviously one company, but there are tons of companies at the moment that, because of supply chain issues, they couldn't get products, and now they've overproduced products, and that's going to really be a difficulty. Another one is secondhand cars. There's some interesting articles on secondhand cars. They are really dropping at the moment, 3% down just last month. So that will feed into the inflation data as well. These are consumable things that we're buying. And so if they're going to be cheaper, then inflation will potentially go down on those things as well. We're also starting to see certain food products that are dropping in price, which is good. And the bigger argument is just, look, the economy is really starting to feel the pressure from these high interest rates that we've got. And so that's the consideration here, coupled with people saying that higher interest rates, what they've actually done is they fed into increasing prices. So rent is part of the inflation figure. So what's happened is higher interest rates have come through. Landlords have been hit by higher rates. They've then had to pass that on to their tenants, and that has pushed up rents. Now, an increase in a rent is a number that's going to stick around for a long, long time. Now, if you had a rent that was £1,000 and it went up to 1,200 quid, that's going to hit you longer than potentially your food bill going up by 20% over a year, right? And so that's the concern as well, that this is really going to be very, very painful. More landlords are also leaving the market, which means rents are going up faster than ever before. So this week is going to be a very interesting one. I think you should be watching on Thursday. I'll always do a video within 2 hours of that interest rate meeting, let you know what happened, let you know what that impact that's going to have on you as a homeowner or an investor or a landlord. So we'll be here live talking about that. So make sure you subscribe if you didn't already. A lot going on this week as well. We've also got leasehold potentially having some big changes in the King's Speech next Tuesday. I did a video yesterday at the time of recording this. 20,000 people have already watched this. So go and check out what's going on with leaseholds in the previous video towards this, because that is also going to have a big impact and potentially make flats worth more money. So do go and check that out. Go and check out other content on the channel, and make sure you like this video before you leave, and then go and watch this video right here.